Hi, this is Diggy from ForexHabits, and we've had a profitable week last week with Euro-US dollar trades resulting in 160 pips profit. Today I just wanted to do some analysis. The Euro-US dollar analysis is up already on the blog. Now we're going to look at Euro Japanese yen. This is the daily chart in front of you. And before I start putting anything else on this chart, there's already a lot of indicators here showing that it is bearish and that it is likely going to drop further. If you look alone at the MACD histogram, that's already in negative territory. The price action is under all the moving averages, the exponential moving averages put on here. The blue one, which is 21, green is 50, pink is 100, and the red is 200. These are all exponential moving averages, but as you can see, the price action is below them, and here the smaller ones are starting to cross through the bigger ones. Now, what I think is going to happen is we had this whole move in 2012 from about the 96 level up to just shy of 111 or just over 111. I'm not sure exactly. 111.40 here. This whole move, I think we're going to do a 50% retrace of this entire move, which is around the 103 level, which is at least another 100 pip down from where we are now. But with a bit of an acceleration, we could actually go much further down, especially since all these indicators are looking so bearish at the moment. If we take a look at the weekly chart here, you can see it's just kind of been moving sideways but down in this wedge for the last 3 years actually. If you can draw a wedge in like this. And we could possibly test the bottom of that wedge again, but at some point we are going to break out of this wedge, I think, to the upside. I'd expect it to, although with Japan and the nuclear situation, I'm not really too sure about that. But for now, it could drop as far as 96. So what I would suggest is that there would be short trades to be taken next week. I think the maximum upside would be about 106, even though I doubt it would get that high since we're under this descending trend line at the moment. So what is possible is a move back up to about 105.80 if totally necessary. So what I would start to do, if you get lucky with this, and if it's possible to do that entry point at about 105, I would short with a stop about 106. We're gonna target probably the 100 level. I don't know if it's gonna get below that again, but we'll see at that point. I mean, that's a good almost 500 pips if you get in at 105. So that seems like a good trade. That's all for today. Keep your stops in. I mean, this seems like a pretty high reward, low risk trade, especially if you start to enter around the 105 level and you can add your shorts. You know, if you do 105, you can do a short at 105, 105.25, 105.50 with a stop just above 106. I'd say it would not get above that again. So that would be a safe place to put your stop. And as I said, the reward seems pretty good with at least 103.50, but probably closer to the 100 level and a bit of an acceleration, especially since the month of May has proven historically to be a rather large down month, especially over the last 2-3 years. So we can expect after this first week that we're just going to get another 2-3 weeks of down action, which could result in a couple of hundred pips to the downside and a lot of profit. Now, if you're not subscribed to my blog at ForexHabits.com, you should head over there, enter your email address so you can get all these updates straight to your inbox and you can profit from the analysis and from the trading recommendations that I do. Once again, as always, the disclaimer is that Forex trading is risky. It can cause substantial financial loss, and this analysis and my site and everything is meant for educational purposes only. Do not trade with money you cannot afford to lose, and always use a stop loss to limit the risk of your account to no bigger than 5% of your account on a single trade. Trade at your own risk.